And a very good morning to everybody. Welcome to the TriggerCharts pre-market rundown for Friday, November 6, 2020. I'm Andrew Horowitz. I am the co-founder of TriggerCharts. I want to talk to you a little bit about what's going on. Of course, the markets in the looking backwards, also look at what's happening moving forward and go through some of the stocks that you have on your mind, as well as some things that we look at for setups. Everything that we talk about today is for educational purposes only. I want to make sure you understand that, and understand that when we talk about some of the indicators that we have, all of these are available on the Trading App Store platform with a 10-day free trial. So you can get all of that. Some of the things we're going to look at today, of course, is the aileron, some of the setups. We're going to be looking at some of the information on an economic front and taking any questions that you have as well. Thank you very much, by the way, for joining us each and every Friday. Thank you for making us the #1 overall highest rated app and indicators in the TradeStation Trading App Store, as well as one of the highest and most popular overall for the suite of our indicators. By the way, some of our indicators are also free for you to test out. For example, we have the simulator, which gives you several different securities that you can check out and learn, and you can match that and pair that with our various tutorials that are available on TriggerCharts.com. In addition, we do have a YouTube channel. You could check that out. And on that YouTube channel, we have the recordings of these discussions that we do every single Friday. So make sure not only to follow along, but probably try to replay some of these so you get a good idea of what's happening. So with that, let's get into some of the topics that we're going to talk about today. So here we are, and we have obviously the futures starting to edge up a little bit. We got some green on the Dow Jones futures, which is kind of interesting because we saw that in the red all morning until the employment numbers came out. Okay, so what are we going to talk about this week? First of all, let me bring up my little chat window. There we go. So if you do want to chat and tell me anything, you can do that. There's a link right now to the overview videos that I put in there over on TriggerCharts as well. Still seeing a little bit of negative on the SPOOs, a little bit of negative on the Qs. Gold is up again, starting to move up, and we're seeing that crude oil is again falling. Bonds are falling, being sold on that decent number that we saw from the unemployment numbers. Big question on everybody's mind. What is the big question? The question is it over? Can we say that the entire election is a done deal? Well, probably not. Even if it is over, it seems like there's going to be lawsuits. There's going to be all sorts of indications that we're seeing that there's going to be a contest. Obviously, nobody likes to lose, and what's going to happen is we're going to see this play out for the next few weeks, depending on if it's an overwhelming number with a good percentage. Markets are pricing in something interesting. The narrative for a long time was this whole idea that if Joe Biden becomes president, markets are going to fall. But the fact of the matter is there was multiple things that happened here. And the multitude of things that happened were really related to the makeup of Congress. In that, if the Senate held a Republican majority, the good news was that there'll be some, inability to get anything done. The tax plans and the things that were supposed to be put into place by a Biden presidency, where they're going to be raising taxes on corporations, where they're going to be possibly doing something to the stepped up basis with estate taxes, where they're going to be doing some further regulations in the banking industry and possibly looking to break up some of the big tech names. Well, that is kind of off the table. If, in fact, when it's all over, Biden wins and we have a split Congress where the House remains Democrat controlled and we see the Senate remains a majority of Republicans. Right now, it's a bit of a toss-up. It looks like there's going to be an interesting situation if we, in fact, get a much closer race on the outstanding Senate races. And you know that who's the tiebreaker in the Senate? Well, it's going to be Harris, right? So Vice President Harris. So what happens there is that if things are leaning towards a tie, passing the House and then moving to the Senate or vice versa, it may come out to be that Vice President Harris, if she gets into office, if this all plays out this way, right, a lot of ifs going on here, could in fact be kind of a mini blue wave, not a total. So markets are trying to price this in and speculate on what's happening right now. One of the things we did see was the VIX plummeted. The anticipation and concern and worry about the election, kind of a collective sigh of relief came over the markets, not only because they went up, but because it's over. At least the majority of the campaigning, the question, what was going to happen is over. The likelihood of a blue wave and being detrimental for stocks potentially is kind of behind us. The VIX came down very, very sharply. Still elevated, but came down sharply. So the reason, if anybody's looking for what's happening, is there any technical levels? Yeah, we can look at some technical levels, but I really think it was this relief rally that this thing is not as bad as was expected to be, and that there's going to be a split house. That was a basic issue. Now, getting to the pandemic, I think it's an area that we really need to discuss. We've been discussing this for some time. It looks like the markets lost interest. The markets just have no desire to really even pay attention to the fact that we're hitting daily records in the United States with new infections, new cases, however you want to classify them. And the world is slowly but surely going into mandatory lockdowns. It's not stay-at-home recommendations in a lot of parts of the world like Europe. It's absolute lockdowns, the latest one by the UK with a 30-day lockdown with the potential of being even longer than that. The narrative is, I think right now, well, if we have more cases, there's the potential for more stimulus. So all this bad news is being twisted into good news for the markets right now. I don't necessarily think that we're going to see the opposite being true, where if we have good news like we saw today with a 6.9% unemployment rate, even though the amount of people that are being counted now, if you look at the statistics of people in the workforce, is a lot lower, and that's causing some questionable statistical variances that are coming out, and that's why we got a drop from 7.9 to 6.9, with 600,000 people added to the payrolls, but yet 700,000 people applying for initial claims each and every week. So it's a bit of a wonky situation there with a questionable statistical relevance of what is actually happening from that side. But we know, time in and time out, the fact remains that statistics, when it comes to economics, is a little bit of fuzzy math. And you have to really put that in perspective. However, the fact still remains that when we get these numbers, whether they're from China, by the way, the United States, or for Europe, that is all that we have to chew on. That's all that we have to discern to make some recommendations on our feelings of, okay, it's getting better, it's getting worse. That's what the markets are saying. Now, you can fight that and debate it and say China's numbers are crap. You could say that, well, these are bunk. It's really a much higher unemployment rate. Doesn't matter what you or I think. The fact is the collective market believes these numbers and then utilizes them to make decisions for their investment thesis. And if you're getting a better unemployment rate, and if you're getting a better overall economic situation or a stabilization, even into the potential for a slowdown with the pandemic that will slow global growth, the hope is that the stimulus on the other side will offset it. Already we saw the UK adding about $250 billion to their quantitative easing program just this week. And the Fed, which spoke yesterday, is definitely in place, saying they'll pretty much do whatever it takes, stay at a zero interest rate bound forever, if that's going to be the case. So these are the things that are going on right now that are really setting the stage for markets. Really the things to be looking at are the direction of the pandemic. If in fact we're going to see lockdowns and stay-at-home orders, that will be an issue and that will spook people in the U.S. because the belief is that there will not be that happening here in the U.S. There's no way that there is any political will. There is no way that there will be anybody brave enough to do that. However, if Trump is no longer president, you don't have to worry about the scorn of President Trump on anyone, whether you're a Democrat or Republican, in a state that is going to then recommend the potential for a lockdown if things get out of hand. And we can go back and forth whether or not this pandemic is real and whether or not the numbers are real and whether or not the caseloads are an actual number, are hospitalizations going on, what is the death rate? It's minute compared to what the the total amount of people that get it and all of that. I don't want to do that. Again, we're going to stick to what we're seeing right now and just utilize that for what we are going to think about the general mental health of the markets. Don't get caught up in any one narrative. Don't get caught up with the thought that, wow, this pandemic is bad, things are bad. That's what the whole point of technicals are. Because right now it would be very difficult for any of us to really say with good faith that, man, the outlook is really great because, well, it's not because we don't have a vaccine, we don't have a slowing down, we don't have a president that's going to be very cooperative, potentially with Biden, as cooperative to markets and using that as the benchmark of their success. A lot of things are negative, a lot of headwinds, but yet markets bounce. Look to the right here. What we're seeing on the right-hand side of our screen right now is exactly what's going on. This euphoric move off of the bottom. We've seen, the worst week since March last week and the best week since April this week, pretty much gaining back all that we saw in 3 sessions, gaining back all that we saw lost in about 2.5 weeks leading up into the election. By the way, this pattern is not unusual. We saw this pattern almost identical back in 2016, right up until the presidential election. People were worried about what was going to be the outlook, what was going to be happening, and then on the election, it bounced up dramatically higher. So, what we're seeing right now is the idea that there is again, to give this relief rally that we'll call it right now. Economic data, we have some signs of deterioration. I think that we're seeing that the jobs numbers are okay. ADP numbers, private payrolls, not so good. ISM is better. Housing numbers are still strong, but a little bit weaker overall. And there's some pockets of areas that are still a concern. Listen, the Fed told us that yesterday. They had a big concern about where we were in terms of the economic cycle and the headwinds that are out there. Again, we're waiting on stimulus, $2 trillion, potentially upwards of that coming maybe towards the end of the year, the start of the year. Big question what's going to happen there. But the stimulus delay that we're seeing right now, that stimulus program that is being fought between the Democrats and the Republicans, one want much lower. The Republicans, the Democrats want a lot more. It's a big fight that's going on right now. And with that, I don't know if we're going to get that full amount. If we have a government where it's split in the Congress between the Senate and the House of Representatives and a different party in the, in the president. Either way, whether it's Trump or whether it's Biden, because there'll still be a lot of roadblocks put up for this. So the stimulus delay equals an economic slowdown, and we're starting to kind of see some of that right now. But right now, it's also all about stimulus. All right, the outlook, a couple of things on a Biden plan. We got a $3 trillion infrastructure plan. They will be very hard to get that done. Tax increase, hard to get done, so that kind of balances. The next round of stimulus, some fighting will continue. Regulatory and regulation increases, hard to get done to roll that back. And we could basically have a logjam of initiatives trying to get both sides to agree. We know how this goes, not only from the last 4 years, but for the last 50 years. Whenever there is, in fact, a split Congress like we had, and as divided as we have right now, very difficult to get things done. And that's exactly what markets like. The uncertainty is lifted. There's not going to be any cramming down either side's throat, anything, because there's a system of checks and balances right now. Now, earnings that came out so far this earnings season. This is the last week of really significant earnings that are coming out. They'll still be pouring in over the next couple of weeks, but the last 2 weeks were the big weeks that we saw. About 83% of companies beat expectations. We talked about this last week, that analysts know nothing. They have no edge. So trying to gauge a number off of an analyst number is pretty much ridiculous. The headline number will be all exciting. You'll see it on CNBC. You'll see it all over TV. They beat, they did this, they're guiding higher. But the fact is, they're guiding higher off of what? They didn't have guidance last period, so we don't know what they're really guiding higher on. But this is the game right now. It's all about beating analysts and beating them pretty significantly. 83%. The usual is about 65% on a quarterly basis when we see that the earnings come out. So an 83% beat shows us that analysts really have no idea what's going on. Confidence is not down, it's down a little bit. ISM numbers looking good. FOMC rate decision yesterday, no change, of course, but they're going to stay dovish as possible. And the employment report we saw today. Next week, relatively light week. We have PPI, this should say CPI, University of Michigan for November, and we're going to see initial claims next week. I'll mention to you, as I always do, that anyone that is a new subscriber to the Commander Series will get a 4-hour free coaching session that is online. Do it at your leisure, whenever you want. It's an evergreen program that we put together, and it is really something good. So basically, it's a $199 value that you get for only signing up and subscribing to the Commander Series. We're going to be looking at MJ, the marijuana stocks, Bitcoin, gold, EEM, which is the emerging markets, GDX, We'll look at silver and a few other things. We see that futures are picking up pretty strongly right now into the open, as we often see with that big pop. I mean, we got 73 on the plus side. After this massive move that we saw just over the last few days, we're seeing that the follow-through is pretty significant. So that's going to be interesting to watch. All right, let's take a look. What you're seeing right now on your screen, let's make sure it's set up right, is pretty much what the Commander Series looks like without the aileron. So if we kind of click over here and we take the aileron off, basically, this is what you're looking at, what you get out of the box with the Commander Series. And one of the things that I really want to share with you and the importance of this is this top part. We don't spend as much time on this for whatever reason, but I will tell you, if you notice, you see that there is something important on the top here. And what that is you see that there is 30-minute or 60-minute and 240 daily, weekly. Now, you could change any of these. You could change this one, you could change this one, and this one. So you have 4 different ones. We keep a minimum requirement of, on the 30-minute, you're required to keep that as our base. But basically, what's important to recognize here is that you get multiple time frames across. So what you do is, very simply, you have the opportunity to very easily look from right to left and see what's happening, okay, on a weekly, a daily, a 240, a 60, and a 30, and look at the trend and how the trend is moving with or against the particular name that we're talking about. Very powerful, because it really gives you either these alerts, whether it's a long alert or a short profit or a long profit, stay out, where is the bias, all of that is coming into play right now. So let's take a look at some of these. Let's go from top to bottom here. Let's look at MJ. Now, I'm going to put something else on here because I like to add this because it's a momentum indicator that we have as well. It's the Aileron 360 chart. And I'm going to put that on there because I like to see where we are in terms of a momentum play overall. MJ, well, this is the marijuana ETF. And basically, we saw on the 30-minute chart a really big ramp from 10 to 12, talking about 20% move or 18% move over the last few days. Significant move in that situation. We are seeing that we are, as of yesterday, right here, getting a long alert. And if you kind of track that by simply putting a horizontal line, always use those. Where's our next level of resistance? Well, it passed right through that level pretty easily. Let's take a look. Where are we going? Right there. We could connect multitude of lines across, moving from right to left. When we can do that, what we see is right there. 1270, where are we trading right now? 1327. So we're up another 6% already, passing through there pretty easily. So really our next level of resistance, let's see, I would say is right about 1330. We're getting right up to that level right now. Past that, you're going to snake up potentially with a nice short squeeze over the top, getting towards 1384 to $14 on MJ. One of the big things is there was some clearance for recreational use in the latest election. Of course, we know that Biden and Harris are more of advocates of marijuana, so that's what's happening. Looks like there's some polling information that came up. Things are getting a little bit crazy. The upside here, I think that we just got, somebody told us that Biden takes the lead in Pennsylvania, which is pretty interesting. Bitcoin has been on fire, up another 2.83% as the dollar is coming down. And we see the same thing happening with gold and silver. We'll look at it in a second. Bitcoin, you could do BTC USD and track that on your charts. All the way back to about the beginning of October, there was some signals that, hey, the worst was over from a momentum standpoint on the downside, started to move higher, which was really nice. And then we started to get this kind of ramp higher. And then you got a couple of calls. See those yellows? The yellows right there. I'll zoom in a little bit and give you a bit of a circle so we could see, or I'll give you a check mark, maybe it will be even better. You can see right there, we got an initial call that was a long, but it kind of came out really quickly. Another long call right about this level here, about 10,670. Right now trading at 15,000. So you could utilize this, whether you trade on the TradeStation platform, the Bitcoin, or utilize another platform. This is available to you. Same thing with Ether, ETH, USD, and a few other crypto names that you could find. Ether is breaking out today, up 7.59% today. So that's kind of cool. What else we got here? Gold. So gold, I'm going to back this up on a daily basis. We use daily for the educational purposes each and every week. I tell you that all the time. Basically, what you want to look at is whatever your time frame is more appropriate for. You could look at things like 60 minutes, 30 minutes for intraday swing trading, possibly go a little bit further. Some people like to use very short term. All the charts, you can use anything you want. Here's a 5-minute chart. Kind of gives you where we are on a 5-minute chart. So I like to use 30. It's just a good time frame that I seem to really like to look at. One of the things about gold, you did see this nice breakup, the drop lower on the concern of what's happening with the election. And now that we see a weaker dollar, the potential for a lot of spending going on with the Democrats, potentially, we see this rise. And again, moving up a little bit in the pre-markets today on the GLD. But 184 does seem like a little bit of a resistance point, but above that, there's really not a lot going on. You can even throw on your radar, which is important, and we could kind of look at where that is. Right now, we're at a high volume node. You get above this area, and let me kind of just take the box tool here and look at this. You know, you kind of get above right there, get into that zone. There's not a lot of resistance going on. You can see there's like nothing here. Always what we want to do is look from right to left. And we look from right to left, that's the whole ticket here. Right to left, right to left, right to left. Say it in your mind, right to left. When we look from right to left, what we could do is look at this by taking an arrow tool or something like that, or just always look, okay, what do I got? What kind of resistance do I have? You know, big area right there that if we get above in that area, we see that there's not much going on in this zone right here. So always look right to left. Use your box tools. Use your arrow tool, the horizontal line tools, etc. EEM, this is the emerging markets breaking out fine. I want to show you this from a long period of time. Take off the radar right now. I go back and forth on the radar. We are seeing a couple of things. Finally, we're starting to see a little bit of a pickup again, a divergence from the downside, a kind of a move and a rotation back up on a momentum basis that we saw the last 2 or 3 days. You know, really kind of a decent run that it had since July all the way through, I would say, September. Then we saw it rotate down, held support pretty well right about the line right there, then picked up pretty nicely. What's nice is that that you are starting to see it break out. Now, there is some levels, I think, going way back. I want to look at this weekly. Yeah, looking on this a weekly base, there are some resistance levels that we can look at. But basically, I think you have to 48 and change on this. And then you kind of get into this wonky area on top. I don't think there's going to be a lot of resistance moving forward from there. So interesting, again, when you start plotting all this. Let's see what we got here else. GDX is the gold miners. Pretty much looking like the gold. They're a interesting proxy for gold if you want to have a little bit more oomph. TLT, this is the long bond. You see this nice long downtrend that happened. Very sloppy action, in my opinion. Still not getting confidence that we're going to see a big uptick right here. We're seeing that the aileron momentum is just, if you just look at it, just kind of like look at that. It's not telling me anything good. Up and down and up. It's not giving me any momentum that really I can feel good about. Here was some nice momentum, right? Nice and straight. This area, this is kind of like it goes down, it comes up, it comes back to the zero, goes a little bit above. Not something I would want to really get involved in at this point. Gilead, I thought this was interesting. They have one of the drugs that are available for treatment of the coronavirus and COVID-19, and this stock is pretty much at its 2018 levels. Just goes to show you, I guess. Silver starting to pop. You have a nice range up to about, I would say about 24.50, give or take, 24.42 before you get some resistance. Getting above that, you have a bit of a consolidation area. Again, I like to use my box tool and kind of just almost outline where is my level that I have to be most concerned about and kind of look at that. Oh, that didn't work. Click that. Let's bring it back down to where I want to bring it. Right about there. That's my consolidation range. If you get above that, we have a really good shot of silver really breaking out significantly. This question that came in that I'm a new TC from Samir. I'm a new TC and in the free trial. I think it is fantastic. Thank you, Samir. Appreciate that. Can you quickly explain the orange, brown, yellow, and white colors on the candles? Okay, a couple of things. There is no brown. There is no white. There is gray. There is red. So let's see if we can find all these. Okay, so what do we have here? Let's kind of look at this for a second. All right, let's bring our circle tool. That would be good. So we have red. We clearly see red. Red is a short bias on the trade. That means you got a confirmation of a short that was below a specific level. That was a shortable event. You get the yellow. Yellow is an alert. Yellow could be alert for either a short entry or for a long entry, depending on what side it is. You can see there's a little dot in there. That's a short entry signal. The gray is a consolidation, so no trade. It's in between. Yellow again is a long bias trade. Orange, which may be your brown, orange is out. It's a long profit. You can see that on top, long profit or short profit. Green is confirmation of a long bias. So you get it there, you get green is good, red is bad. You know, use it that way. But on the top here, it also tells you everything. I'll also mention that, Sam, we have all this in our training guide, the instruction and manual, if you will. If you want, send a note over to support@TriggerCharts.com, and we will send you a guide on what all these colors mean. But good question. Thanks for that question. Hopefully that answers some of that. Neo's interesting. Just been totally riding high. I mean, if you look back this. So look at this now. Look at what this looks like, right? This aileron, solid, looking good. Momentum is on its favor. It looks good from that aspect. And, you know, we had a consistency of breakouts with green, a little bit of consolidation, a breakout kind of out quickly, a breakout, getting some nice numbers, you know, from about 20 to 29, a breakout above 29, now still in the long, all the way up to 42 and change, down a little bit in the pre-market today. This is a great chart that you want to look at. Here's an interesting situation. This is a solar company, came right down to support. This was a company that has really seen a nice run overall. What I want to show you here is basically where we came down to, the support that we could kind of draw that line straight across. Pretty much got right to that support line, bounced up, moving up a little bit today. Solar is supposed to be favored with a Democrat or Biden win here. Came out with earnings that were good, but yet not as good as the numbers that they were expecting. I still think solar is interesting. This roll down that we saw here, I would still wait for. Obviously, we're in a short mode right here. It's a lot of nothingness. When I say nothingness, when I look to my right, I don't see anything. We got a little bit of a zone right here that you could break up into about 256 level, higher price stock, but yeah, we're going to see some. I like this stock from a fundamental standpoint and from a conceptual standpoint. It's just not playing over the last couple of days in the right way. Peloton's down about 3% pre-market. Peloton obviously had a nice run. You can see again a really nice aileron run overall. Got in some trouble right here, was the signal to get out. Confirmed it with an orange consolidation back into the short mode. Got back into a long mode yesterday potentially, but I would again have said, hey, you know what? The situation we have right now is all about earnings coming out last night. While they did good on earnings, not as good as expected. So we may see this kind of come in a little bit more throughout the day. Roku came out with earnings, smashed the numbers last night. Really interesting because a lot of competition in this area right now. I think Walmart and Samsung or somebody's coming out with a competing product that's going to be built. I don't know if it's Samsung, but it's Walmart. You saw this kind of roll down here, this hold, not at any particular level. A lot of gappiness in here. But right now, you're probably going to get, where are we at? Up $11 at what, 236? Yeah, you're going to be in close to an all-time high zone within a few dollars there. Live Nation also reported kind of a miserable number. I don't know why they're not taking it down a little bit more. Reminds me of the casinos. Wynn reported a miserable number also. Down only 2% because I guess it's just so obliterated. We talked about a line here to the 66.89 level that was nice support. It pretty much got right to that. Look at that. Wait, where'd the line go? Right there. Got pointed right back to that line earlier in the week, right there. And you could have had that pickup of a nice bounce on that kind of reversal that's going on there. Basically, I want you to keep on the lookout for these patterns where you see a combination. If you decide it's just $29 for the extra piece of the chart per month. If our stuff doesn't make you money on a few trades, if you do it correctly, it pays for this overall product, time in and time out. So I want you to make sure that you are thinking about utilizing this because it's not just price-based, it's price and volume. Remember that. And we utilize the footprints in the sand, if you will, or the lines in the sand that are built based on who is putting their money into play. And we look at, in particular, the levels when it comes to the larger numbers where we stick in all the volume in there. And, so right now what we're seeing is that the continuation of some really good action in the indices. that probably will end up being kind of going towards, I mean, the projection is, the magnets are that it will continue going higher, especially with more stimulus if it happens. So I want to thank everybody for joining me this week and every week. Make sure to tell your friends. Make sure to check out all the free trials and the 10-day free trials that are available on TradeStation. And what we'll do is answer any questions that you have throughout the weeks. Thank you so much for joining me. Have a very profitable day.